Hello, my name is Alan Journey. I am one of the co-facilitators of Southern Oregon Climate Action Now, and I'd really like to welcome you to this, our second general meeting in the era of COVID. And as you can see from the screen, our program in a few minutes is going to be presented by David Savage on socially responsible investing.
Technical problem.
Okay, a couple of Zoom tips. Some of you are joining us on Zoom and some of you are joining us on Facebook. The major Zoom tip is at the top of your screen, click on View Options and select the side-by-side choice. If you have questions as we're going through the program, please write them into the chat box. And to get the chat box, you will see along the bottom of your screen, one of the options is chat box. And if you hit that, that'll open the chat box. And at the bottom of that box, enter your question and then click enter and you will see it gets sent. We will pause several times during the presentation to take questions and have David answer a few questions. And then at the end of the program, we'll have a more extended Q&A. You will be muted throughout the presentation by our technical leader, Carmen Prophet, and then so you won't have a chance to actually verbally ask questions. They have to go through the chat. If you're on Facebook, please type your questions in the comments section of your Facebook screen, press enter, and then we have a volunteer who is going to copy those questions into the Zoom chat. And then when we have our question breaks, those questions will be part of the question and answer set. So I'm hoping that makes sense to everybody. And have fun as we go through the program. I will say this is a program that we have been meaning to offer probably since about the time that SOCAN was inaugurated back in 2012. And so it's a delight for us to at last have David come and do a program on socially responsible investing. On behalf of SOCAN, of course, I'd like to welcome everybody, whether you're in the Zoom room or whether you're out on Facebook. What I'd like you to do before we start the program is just think for a moment. Conjure up in your mind what you understand from the term socially responsible investing. This will help you get a mental set, and then David will, we hope, over the next 40-45 minutes, answer that question, and we hope that you're somewhere close. The format for the meeting, I've sort of introduced it a little. We're going to have a presentation from David Savage. It's going to be in sections, and after each section, there will be a short Q&A period during the course of which Ellie Cosgrove will select questions from the chat box and pose them to David, and then we'll go on with the program a bit longer. Zoom, again, submit your questions in the chat box, Facebook in the comments section. At the end of the program, we'll take the last 5 minutes to do a wrap up on SOCAN activities and the activities of other groups that are engaged in parallel activities to ourselves. And also during that period, Kathy will talk to you about actions that you can take and send you to this link where you can get information on banking and divestment and investment. So this slide will appear again later. So without further ado, I'm going to introduce you to David Savage, who was introduced to us by Liz Olson, and we're delighted that David agreed to do this. As you can see from this slide, David has been doing this for some time. I'm not going to say anything more about it because David will tell you a little about his experience in due course.
Thank you, Alan. Welcome to everyone who is viewing out there. And again, thanks to Liz Olson for connecting me with SOCAN. I'm very delighted to be here. And whoops, I just skipped a slide. All right, so again, welcome. I've got a little disclaimer there in the bottom there, which basically just says, even though I will be mentioning some specific mutual funds here and exchange traded funds during the course of this presentation, if you invest in any of them and lose money, please do not sue me. So the next slide here, this is a little bit of an introduction to the program that I'll be offering here. We'll be talking just very briefly about my background. I've been doing this for a while. And in terms of the presentation itself, I want to present a short history of socially responsible investing. So that kind of puts where things are today and what options you have for investing in context, in a historical context. We'll pause for about 5 minutes for some questions at that point, questions related to that section, hopefully, but I'm pretty open to any questions that you want to toss at me. And then we'll go into the actual mechanics of constructing a socially responsible, or as it's known these days, and I will explain this in a little more detail, an ESG, or environmental and social governance portfolio, with a particular emphasis related to this group on fossil-free investing. We'll have another round of questions after that. And then there'll be a short section at the end. Alan wanted me to speak to, beyond just how you invest your money, divesting. In other words, how to avoid particular financial institutions that might be involved in fossil fuels. Then there will be just a little bit on socially responsible investing resources, and then another set of questions, and then I'll turn it back to Alan. So let me go ahead and just briefly talk about my background a little bit. Back in 1990, I had a little inheritance that I got at that time. I wasn't yet a financial advisor, but I was quite concerned about the environment and about doing right with my investments. And so I was living in Bend at that time, and I looked around for someone who could help me with socially responsible investments. And at that time, the field was still pretty thin, and I had to drive up to Portland to find a socially responsible investing specialist. So I pursued that and have continued that on my own to this day. Then in 1994, I became a financial advisor. I started with American Express and then moved to Morgan Stanley, and have since then been developing socially responsible portfolios for my clients. So I've kind of seen the last 30 years of history, and there's been quite a progression and quite a proliferation of socially responsible funds during that time period. So that's been a very gratifying thing to see. Along the way, I at Morgan Stanley for a few years, working for a Wall Street firm. Well, let's just say I saw a few things that did not fit my ethical standards. And so my assistant and a colleague went out and started our own firm. So I sort of divested myself from Wall Street, let's say, and that was 17 years ago. I've been a financial advisor, fee-only financial advisor in Ashland for the last 6 years. I have my own firm here, and I think as noted on that first screen, I'm a certified financial planner as well. So that's the background part there. As far as the history of socially responsible investing, let's just go ahead and dive in, because I think you'll find that there's quite a history here. So socially responsible investing really goes clear back to the Old Testament, or the Torah, and the Jewish concept of tzedek, justice and equity. I'm not an expert in this, but I found it fascinating that that the concept of essentially putting your money and in the right places and doing no harm is a concept that really does go back a long ways. Also, in the Qur'an, there's a tradition of socially responsible investing. And to this day, if you look at the bottom line there, devout Muslims will typically avoid investing in alcohol, pork, immoral goods. So that would be alcohol, tobacco, gambling, the traditional, and pornography, the traditional sin stocks, as it were. Gold and silver, because they don't believe in profit, and weapons as well. Various different Christian communities have also a tradition of socially responsible investing. Maybe the most prominent being the Quakers. They were amongst the first or the first to prohibit their members from participating in the slave trade. And then John Wesley, many of you know of him as one of the founders of Methodism. He had a famous sermon called The Use of Money, which outlined the tenets of social investing. Basically, again, do right with what you have, and particularly looking at it from a kind of a labor perspective, avoiding practices which put workers at risk. Then we get into the 60s, and this is kind of the modern roots of social responsible investing with the Montgomery bus boycott and some other boycotts that were organized at that time. So when you think about it, social responsible investing doesn't only include what you might invest in, but what you wish to avoid. And so boycotts have been a strong part of that tradition for a long time, particularly since the 60s there. I was kind of interested to see this, find this the last quote there that he specifically mentioned and urged his followers to avoid Coca-Cola, seal test milk, and Wonder Bread, mostly because of their poor labor practices. Of course, those of us who remember Wonder Bread might wonder why anyone ever ate that stuff anyway in the first place. So then we moved to the 70s, and with the environmental movement, that added a new piece to social responsible investing. One of the more prominent protests there was against Dow Chemical and their use of Agent Orange in Vietnam, which is still affecting Vietnam veterans to this day. We also saw some strong movements towards women's equality with the Equal Rights Amendment, civil rights, labor, big strong drive towards avoiding nuclear power, which in a way is kind of coming back in a little bit now, and emissions control. However, we still do have, the Agent Orange is from Dow is no longer, but we do still have a very toxic, dangerous phenomenon out there that still exists. And I couldn't resist, I'm sorry. As I was looking for photos of Agent Orange to put in the presentation, I actually found a number of these like this. So I had to try to add a little humor there. In the 70s, many of us remember apartheid and strong protests against and boycotts against South African goods. And it worked, in fact. Not all boycotts work. As a matter of fact, there have been studies showing that some do, some don't, but this one absolutely did. And basically what happened was the movement to change things in South Africa came from a group of businesses which finally said, look, we're hurting here. we've had enough. And so that was one of the things that brought apartheid down. So another part of the movement there. In the 80s, the movement continued to grow. The SRI there, again, of course, stands for socially responsible investing. Churches and universities with their endowments started to really get interested in this and take a look at how they might be able to manage their investments, because they have some pretty significant investing power. The movement spread to Europe, Australia, and Japan. And there was a survey that at that time that there was something approaching $40 billion invested already in social responsibility investing, and it's grown significantly since then. There were some detractors, Fortune magazine and some others kind of made fun of investors who were voting their conscience, calling the movement feel-good investing, as if the thinking was at that time that you couldn't really make money and be socially responsible at the same time. And we will see later that that has been disproven. I want to just skip down to the bottom of this slide. Back then in the 80s and 90s, and this I remember from when I was getting started, your typical screens, so this would be things that investment managers would screen out, would be, again, the sin stocks: alcohol, tobacco, gambling, pornography. And then also there was a focus, of course, on environmental issues, so avoiding nuclear energy, polluters. Of course, this was 84, I believe, was when the Exxon Valdez disaster happened, and that was a big catalyst towards socially responsible investing. And then weapons as well. And weapons back then meant more military weapons, although these days there's more and more attention to handguns and just guns in general. In the 90s, this again was when I started investing in socially responsible investments. Some of the major fund families at that time were Calvert, Parnassus, and Pax. Those are pretty much the only ones, as I recall. They're all still around. There was a new an alternative energy fund called New Alternatives, which I myself invested, and that one is still around. We'll talk about that a little more later. And then in 1990, Amy Dominy, who was a pioneer in the field, created the Dominy Social Index, which was essentially the S&P 500 minus 100 of the more offensive companies. And we'll talk a little more about that particular index later. It's now called the MSCI KLD. That's a tongueful, but a mouthful. But the MSCI stands for Morgan Stanley Capital International. Kinder Lin, I forget what the L stands for, but Dominy 400 Social Index. The movement continued to grow in the 2000s. The UN got involved, created principles for responsible investment, and the Global Impact Investing Network. 2010, state governments got involved in CalPERS, by far the largest public pension fund in the U.S., started adopting a plan to incorporate environmental and social governance principles into its investment process. And more states have gotten on board, and more pension funds have taken a strong interest in this. Of course, we had the Paris Agreement, and then Morningstar, which I will mention again later, but Morningstar is a mutual fund and stock rating company where you can go in and look at the ratings. Their particular focus has been in the past on performance. of mutual funds and now exchange traded funds. But they started, surprisingly, about 5 years ago, adding a sustainability rating also to mutual funds. And that's on, whereas their performance ratings are on a 5-star basis, 5-star like hotels, 5-star being the highest, 1 being the lowest. Their sustainability ratings is in globes. So a 5 globe rating gives you the highest degree of sustainability. We will talk in more detail about what the sustainability means from that perspective. And then in about 5-6 years ago, fossil-free funds finally started to debut. I kind of think of the fossil-free movement as being kind of really the latest iteration of the socially responsible movement. And we'll go into great depth in the next section about how to identify fossil-free funds. And then finally, Vanguard and Fidelity got on board and created ESG funds. And you know when the big guys like that are getting involved, then you've got a movement. So environmental and social governance investing now includes the traditional negative screens that we talked about before, the sin stocks, et cetera. We've added fossil-free investing. And then the movement has been in the last 10 years, not only on what to avoid, but what companies to include. So we're starting to look at it from a positive point of view, looking for companies that have good labor relations, diversity, and of course that's a topic that's very timely right now, and environmental sustainability. I also wanted to mention that this may not apply so much to anyone who's listening here, but there are a couple of other facets to ESG investing. Impact investing. So that's a type of investing that is, rather than avoiding particular companies or screening in particular companies, it's investing typically in community projects where you're trying to make a direct impact. Community investing is a very similar concept to that. And then shareholder activism involves where shareholders will get together and try to influence the board of directors of a company, sometimes actually buying stock in a company that they don't like and getting together and trying to make change that way. This is a really nice slide here because it kind of encapsulates all the ESG criteria that people look at now in their screens. And I hope it's visible there. You have may have to stare at it a little bit, but on the green over there, we've got the environmental components, all the different things that managers are looking for when they're screening in or screening out companies. The blue is social. So again, that's something that's been added more recently, things like workplace safety, labor relations, benefits, again, like good family leave policies. Of course, we have diversity and anti-bias issues. And again, a very timely, it includes racial equality there, and something that people are looking at a lot these days, human rights, etc. The orange relates to corporate governance. So they're looking at the corporation itself. Do they have diversity on their board of directors, for example? Is their board of directors independent and transparent? Things like that. What this all really boils down to in a nutshell, if you want to think about it, is are companies being good citizens? Are they doing the right things? And more people are realizing that corporations that are doing the right things, treating their employees well, taking care of the environment, being good corporate citizens, are going to be more profitable. And Wall Street's finally figured out that, the two are related finally. And of course they would be, but this is really getting a lot of attention, and there are more and more efforts to kind of quantify the degrees to which companies meet these criteria in a positive way, because the thinking is that those companies will are not only the ones that people will want to put their money in, but also will tend to be more successful. And then here's a little note towards on Morningstar. They do have, again, I mentioned the sustainability rating. You can find that simply by going to morningstar.com. You can sign up for their rating service. It is free. The only thing you don't get is detailed reports, fund reports, but you can get a lot of information there. And you can look up their sustainability ratings. We'll talk about carbon-related ratings in a minute here too. And so now we're at the question point for those things that we just talked about. Any questions there, Ellie, that have come through?
Yeah, so so far no questions, but I did just want to remind everyone that you can ask questions. If you're watching this in the Zoom, you just need to enter your question into the chat box. And if you don't see where the chat box is, sometimes you need to maybe move your mouse if you're on a computer, and then you should see a little thing pop up, a little bar down at the bottom of your screen, and one of the options to click on says chat. Then if you click that chat, you can type in whatever your questions are. And then if you are watching on Facebook Live with us right now, you can enter in your questions in the comment section of the live video. And then those questions are also making their way to me so that we can get them answered during the Zoom call. And yeah, I'm going to turn things back over to you, David. Thanks so much.
Ellie. I'm noting that I'm a little behind schedule here, so I'll move forward. The next section is, so I didn't mention this in the introduction, but as a financial advisor, of course, my focus is on how to develop portfolios for my clients in the real world that meet their values. And so, you know, we talked a bit about the history and whatnot, but my real focus is on how to implement investing in the real world. So that's what we're going to be focusing on here in this next section. There will be some funds that are mentioned. The point of those is just to give you an idea of what some of the representative funds are out there that are used. If you are already doing socially responsible investing, you may wish to check and see if you have some of those funds. Because I will be including some of the top performing funds in some various categories. So let's look a little bit at how you would go about either with an advisor or on your own, developing a portfolio that was both profitable with a reasonable amount of risk and yet also socially responsible. In order to talk about how to construct a portfolio, we first have to talk about this concept called asset allocation. So I won't read this whole thing to you here, but essentially asset allocation is how to diversify your assets in such a way that you have maximized your returns for the amount of risk that is comfortable to you. And so it's basically don't put all your eggs in one basket. The baskets that we're talking about in this case are asset classes. So here's an example of typical asset classes. The most traditional ones in the broadest sense just being bonds and stocks, but there are different types of bonds and different types of stocks. More sophisticated investors will also add alternatives very often. The most commonly added alternative is commercial real estate or real estate investment trusts, or REITs as they're sometimes called. You're investing in a basket of commercial properties that way. I will note here just briefly for those of you who may be a little hazy is the difference between a stock and a bond. A bond is simply an IOU. You're lending money to someone else via by buying a bond from them. Whereas with a stock, you actually own equity in that company. So sometimes bonds are also called fixed income because you're receiving interest on those, whereas stocks are sometimes called equities. There are more categories under both bonds and stocks that I'm listing here, but these are the main ones that you would want to have in any well-constructed portfolio. By the way, if you have a smaller portfolio, you don't necessarily need to do all of this. And by smaller, I would say under 50,000. In that case, I'll show a balanced fund as a recommendation later on here. So what would your typical mix be? Those of you who have been investing for a while know that just a traditional mix for kind of a middle of the road investor would involve about 60% in stocks and about 40% in bonds. And of course, if you're older or your risk tolerance is less, you may want to have less in stocks. My kids are in their early 20s, and I recommended that they have 100% in stocks. No reason for them to have bonds right now because they have time to wait out the ups and downs. Just a brief word on this term exchange traded funds, because these have gotten to be more common. Most people know what mutual funds are. They're simply a pool of investments. A bunch of investors pool their money via a fund manager by buying into a particular fund, and then the fund manager goes out and buys a portfolio of whatever they're going to buy. Exchange traded funds have gotten quite a bit more popular, and they're similar to a mutual fund in that they're diversified, but it's typically a fixed group, a basket of stocks or bonds or whatever they're buying, and so that's what passive management means there. And the managers aren't buying and selling them on a regular basis. They just buy a basket of whatever it is, stocks or bonds, and then hold those. But one of the reasons why they're popular is the management fees are very low with these things. They're also very easy to trade. Moving to the bond fund area, I wanted to list a few bond funds that are some of the top funds out there. There are far fewer socially responsible bond funds available than there are socially responsible stock funds. I'm not sure exactly why that is. I think it's just a little harder to put bond portfolios together, perhaps. There are far more bond offerings out there. They're in the hundreds of thousands than there are stocks. There are only about 10,000 publicly traded stocks in the US. So that may be part of it. Just a little note on government bonds. They really provide the best diversification against versus stock market declines. But you might just ask whether the US government is socially responsible. I'll let each of you decide that. There could be some debate about that. Below that, I've listed some of the more common socially responsible bond funds. This isn't an exhaustive list, but these are some of the top ones. Again, if you look through your portfolio and you don't have some of these, you can look these up on Morningstar by entering the ticker symbol shown in parentheses. Here's a little note, by the way, that if a symbol has 5 places and it ends in X, it is a mutual fund. If it has fewer than 5 and doesn't end in X, then it's an exchange traded fund or possibly a stock, although I am not mentioning any individual stocks or stock symbols here tonight. So you may want to have some international funds in your portfolio. There are very few socially responsible international bond funds out there. The 2 that I've listed there, I probably wouldn't invest in either of those myself. So socially responsible investing is really kind of a matter of compromise to some extent, to try to figure out maybe what your values are and what areas you might want to compromise on a little bit. This might be one of them. When we look at US stocks, I'm going to pick up the pace here a little bit because I'm seeing I'm a little behind. I was ambitious with the number of slides I put in here. This is the area that people will typically be most concerned about being socially responsible in, is avoiding investing in particular companies. So if you just look at the Standard & Poor's 500 index, there are about 10% of the companies or the profits from the companies in there are related to fossil fuels. this most common social index that we talked about earlier, still it weeds out a lot of things, but it still has a 6% fossil fuel involvement. Now, for you folks out there who are really concerned about climate change, that may just not be enough. So I wanted to talk about fossil fuel screening here. There's a wonderful tool. If you take nothing away from this talk other than this, it should be this right here, that there's a great screening tool there, Fossil Free Funds. And there's the website. I've also included it in the resources. And actually, I found it on the SOCAN website. It was already on there. So kind of underneath the various links. And you can input this symbol or even just the name of your mutual fund or exchange traded fund in that website, and it will give you a fossil fuel grade. If a fund gets an A, it has virtually no fossil fuels in it. There aren't too many of those, but and then there's kind of a scale. I think B is somewhere from 1 to 5%, and a C is like 5 to 10% of the companies that are in that fund participate in fossil fuels. I have the fossil free definition there. If you look at the number of companies that are involved with fossil fuels, it's pretty significant because there are so many angles to this business. So you really have to be mindful if you want to get completely out of that, including avoiding companies that provide services to, say, drillers or exploration or pipelines or those things. You really have to be mindful. I've got a little link there, a little comment there on about Morningstar, and they also have a place where you can go to look at the fossil fuel involvement, but Fossil Free Funds is really the best website. Now, you'd think that funds that advertise themselves as being fossil free would be fossil free. And unfortunately, that's not necessarily the case. If you look down there towards the bottom, for example, at this iShares low carbon ETF, one of the first ones that came out, and the S&P 500 fossil free fund, those actually get C grades, meaning they do have some fossil fuel companies in them. I've listed some ones that get A grades. Some of the top funds. I've kind of done your sorting for you here a little bit. These are the first 5 that are listed are some of the better performing ones that receive A grades. An example of some of the companies that you might find in the lower rated funds. Here's something maybe people haven't thought about, is that utility companies, typically considered to be pretty conservative, good investments out there, are what if they generate some of their electricity using coal, natural gas, or oil? So here's a list of alternative energy funds just for reference, typically wind and solar. I don't particularly recommend this category just for performance reasons, because these funds tend to be very, very volatile. They can go up 50% a year and they can go down 50% in a year. So for most people, they're going to be too volatile. In recent years, they've done okay, but there was a period back about 10 years ago where 3 years in a row, they went down a total of about 80%, this category. So you'd think it would be a fabulous area to invest in. You just have to be careful, that's all. Moving on to some large cap funds, I'm going to pick up the pace here a little bit, that get some top grades. Here's some of the top funds out there. If you want to use some, have some mid-sized companies in your portfolio, which is a good idea. Small companies, same idea. There are some good, some A-rated ones down there on the bottom there, those bottom 3 ones. International stock funds are harder to find in the social responsible area because there's more research that's involved, but there are some decent ones out there. There's only one completely fossil-free fund by mandate, and that's the Green Century, but there are a couple that get A-rated. by the way, if a fund gets an A rating, it doesn't mean it's always going to have an A rating. Unless it has avoiding fossil fuels in its mandate, in its screens, it may just have an A rating by chance right now, and it may at some point decide to add some fossil fuels in the future. So beware of that. Quick note about REITs there. If you don't have a large portfolio, say under 50,000, and you want to put all your money into one fund to make it easy, here are a few of the top rated balanced funds, as they're called, out there. Sometimes the question arises as to whether socially responsible investing or ESG investing hurts performance. The studies show that it does not. In fact, that it's about. In fact, that intuitively you should think again that why would it? But for years there was the thinking that you had to give up performance to invest well, and that's not the case. A couple more studies on that, and we've reached the question point here. So I think I'm a little behind still, but Ellie, do we have any questions?
Yes, we do. So my first question from Lori, do Vanguard or Fidelity offer ESG index funds or just actively managed funds?
Yes, they do. Vanguard has one. And how would you find it? You might just go do a Google search for that. I don't have the ticker symbol right on the top of my tongue, right on they've got a social responsible S&P 500 type of index fund, essentially, VTNFX or something like that. Vanguard FTSE, which stands for FTSE, socially responsible. So you can look that up. Fidelity's is an actively managed fund. So Vanguard's the only one of those that would be passively managed.
Okay. Then the next one is from Mary Ann, and she's concerned about the challenges in the market right now, and why would ESG funds be any better than others? And is it safe right now to invest in those funds?
Well, from a market risk point of view, they wouldn't be any better. Of course, from a conscience point of view, they would be. But for people who are concerned about market volatility, socially responsible funds would be in the same category, really, in that regard. I don't want to get too much into that, but what we've essentially seen is a very severe sell-off in March when news of the virus first came out. We saw a very extremely robust recovery in April, May, June, getting back almost to where we were before the huge sell-off in March. Are we out of the woods? No one knows for sure. Best thing to do is to have a diversified portfolio and ride out the hard times. If you have cash right now, I don't know if I'd plow it all into the market. I'd probably be a little cautious and trickle money in a little bit over the coming months, or maybe hold off and wait and see if we get a 10% drop or so, which would be defined. That's what a correction is defined at. There are very few people who are. Some people who are still saying that we could end up going down as low as we were when we could retest the lows in March. So we don't know for sure. The government stimulus programs have made a huge impact, and that's what's pretty much kept us out of a recession so far.
Great, that's good advice. And then I'll give you one more question before we move on here. You said when you were talking about your background that you left the stock market. With that background, how do you work with your individual investor clients, and are you a broker?
Oh, well, I divested from Wall Street, meaning I don't work for a Wall Street firm anymore. So people who work for Morgan Stanley and Merrill Lynch and companies like that are employees. So I'm kind of an independent contractor. And I you still, if you're in this business, you still have to have someone to kind of be your gateway to to the markets and whatnot. And that's called a custodian. So I happen to use Charles Schwab as my custodian. They're the ones that they're kind of the bank behind me. So if you're looking for a fee-only advisor, they all have someone that they use to kind of manage have the funds. You never want somebody who just takes the money and puts it in their own bank account and then makes up statements, and that's what Bernie Madoff did. That's how he got away from that, with what he did. So you always want to look for a custodian, someone who actually uses a custodian. So are we moving on, Ellie, then?
Yeah, let's move on. And there's
Okay.
a couple more questions, but I think we need to move forward and then we'll address
I want
those.
to try to stay on schedule as much as possible. I'll go fairly quickly through this. This I'm not really an expert in divesting, other than that I closed my own Wells Fargo account about 10 years ago. And that turned out to be good timing. But if you look at the companies that finance fossil fuels, it's interesting. And there's a good link later on under the SOCAN website to this. This is where I found some of this information. If you look, for example, the financiers of tar sands drilling and fracking, there's one company that comes up in every single case. So if you have an account at Chase Bank, you might very well consider moving that money. Also consider investment banks. Morgan Stanley is a big player in financing gas and oil. And just a note that Merrill Lynch is owned by Bank of America, which is also listed there as one of the financiers. I mentioned that as just in terms of, people often think about divesting from where they have their savings accounts, but you might also consider possibly divesting from where you do your investing as well. So credit unions are a great place. There are these community development credit unions, which take an active role in their communities. There's a link to a list of those. Here are some resources. And Alan tells me that you can replay this presentation and go back and look at some of these. Also, the PDF will be available. And I think Kathy might be posting some of these on the website too. So I'll go quickly through this. A few more resources there. And then I found this very interesting. I just went to SOCAN's website myself. Under ACT, Take Action, Individual and Collective Action, there's some really good resources there. There's the fossil free funds right there again. So you can access that through the SOCAN website. There's a really good resource there for just lists of socially responsible funds under the Green America website. And then banking, a very, very good article. That first link there is a really good article related to banks that finance the fossil fuels industry. So some really good resources right there on the SOCAN website. So kind of move quickly through that. Hopefully that bought us a little more time for a few more questions here.
Yes, definitely. So I only have one so far. So if any of you who are listening in, we have looks like about 12 more minutes, or maybe 5 or so minutes with David. So keep the questions coming. I do have a question from Ron. He says, the House Democrats have just announced a plan that's 538 pages long for addressing climate change. And that plan has a goal of major reductions in atmospheric carbon by 2030. David, can you offer a wild guess as to how this may affect investing?
That's a good question. Well, it would certainly, I would think, put more attention on the whole area, and put more pressure on companies to, get with it in terms of developing their own carbon reduction plans. That's the most I can speculate on it. Again, my expertise really is in investing, not so much in following the political scene, although certainly politics influence influences economics to a great degree. So I guess I'd just say that's a very hopeful development. I might say that fossil fuel divestment is the apartheid of our times. So it is going to get more and more attention as time goes forward. And I think the momentum is really going to be building. I mean, it was just 2 or 3 years ago that I looked at lists of fossil-free funds, and there were only 2 funds available. And you saw earlier that there are more available now. So I think that's going to get more and more attention. And of course, that is certainly part of the ESG screens that are applied as investors look at companies, particularly, the risk that they have due to climate change, and maybe their efforts or lack of efforts to have plans in place to address climate change. So it's a big field, certainly.
Definitely. Let's see. I'm not seeing any more questions here. Alan does want to know if avoiding alcohol is a prerequisite for avoiding fossil fuels, since he feels a little more concerned about avoiding fossil fuels than alcohol.
Yeah, I understand that. And no, it's not. There is one of the international funds that I listed there was the ClearBridge International Fund. Actually gets an A grade for fossil fuels, but one of my clients, I was looking at that for them, we discovered that they have a little bit of investments in Diageo, which is an international alcohol company. And when I told her that they've got a little bit of beer and wine in there, she said, "No, that's fine. I enjoy a little bit of wine with my dinners, and so that's okay." So
alcohol is very important to us old fossils, right, Ellen?
That's right. So if you really want to focus on the fossil fuels, use those fossil free ratings, and most of the companies, the funds that have A ratings will also have some other screens in them. But if that's your biggest focus, and that, again, that is part of the trade-off here, because if you look at winnowing companies down, if you have too many screens, you end up with nothing. And the only way then to have a portfolio that meets your exact needs would to just invest in individual stocks. That's a possibility, but it requires a lot more maintenance, and there is more risk. You typically have to have at least 20 stocks in your portfolio to be diversified. And then are you going to be picking international stocks and small company stocks? Those are very hard to pick. A great question, Alan. And it is really a matter of what this is all about, is aligning your money with your values. So if you don't mind a little bit of Guinness in your portfolio, then that's fine.
Thank you, David. So that's it for the questions. Alan, if people have questions later on, maybe they're watching the live video after it's finished being live on Facebook, how would you like people to submit their questions to you and David?
I think it might be easiest to send them to Kathy, Kathy, at SOCAN.eco, and then we'll get them to David and get a response back to people. So thanks for thinking of that, Ellie.
Yeah, no problem.
Is that all the questions we have then?
That is all of the questions for now. Yep.
Well, I would like to thank David very much. I have played around with some of these ideas and done some reading for years, and this really helped put things together and give me a good perspective. We also, SOCAN, worked with some other people to get the city of Ashland to divest, or to encourage the state to divest from fossil fuels, along with the city of Eugene. several years ago. And so it's something we've been interested in for quite a while. And it's really encouraging that there are more options and also these tools for evaluating. That's a great improvement.
Great, thank you,
David,
Kathy.
any last, go ahead.
I'll sign off here. Here's a little shout out to Ken. I see you out there. Ken, I see your picture. How you doing? Miss you at the Song Circle. Okay, back to you, Alan.
All right, and I'll share screen here. And so my task is to talk through some of the things that are happening, SOCAN events that are happening. And so everything I'm talking about is on socan.eco/events. So if you want details and you miss them, you can go there to get it. If you live in Ashland, we have a group called Ashland Action that has developed a survey asking you to share your experiences and insights during the recent COVID virus and the restrictions and the impact that's having, hoping to learn from some of those things. It's almost ready to close, but if you go to socan.eco/Ashland, it'll take you directly to the survey. And we had it closing today, but we decided to extend it till tomorrow at 8 o'clock. So if you still want to do that survey, please go to socan.eco/Ashland and do that. SOCAN's Leadership Circle is where the people who are working and leading different projects come together every 2 months. Our next one is on Wednesday, July 8th. It will be a Zoom meeting. So if you want access to that, send me an email, and that's open to everybody. So if you're interested in knowing some of the workings of SOCAN and the different activities, feel free to join us for that one. The government group meets each month, and the next meeting is Monday, July 13th. Again, that's a Zoom meeting, and Alan is the contact for access if you're not on that email list. The Natural Resources Group, the Forest and Fire Project, will meet Wednesday, July 15th, and Gary Clarida is the contact for that one if you're interested. Alan has a presentation coming up. He's been asked by the Jackson County Library Services to do a series of 3 presentations, one each month. So this is the second one, talking about the Rogue Valley climate trends and projections and why we care. You need to register for that. So if you go to the SOCAN calendar, socan.eco/events, then look on July 21st. That'll give you the information you need. We also have a group called Sustaining Climate Activists that meets once a month. The next meeting is Saturday, July 25th. Again, a Zoom meeting that's led by Liz Olson and Ken Devaney. And Liz is the contact if you're interested in information or access about that gathering. We have a coastal SOCAN group, and at our last leadership circle, we said we wanted to have programs talking about permaculture and regenerative agriculture. And we decided that was too much to have in one session. And so Coastal SOCAN is going to have the presentation on permaculture, and that'll be on Wednesday, July 22nd. And Bill is the contact if you want access to that Zoom meeting. And then the following week on July 28th, Rihanna Sims is going to do the presentation. We're calling it Digging In, Master Gardener Meets Master Climate Protector, How to Practice Regenerative Agriculture in Your Backyard. So taking some of those regenerative agriculture concepts and giving people specific ways of using those in their yard or garden. That'll be Tuesday the 28th, again, a Zoom meeting, and we'll also live stream it on Facebook. So access to that Zoom meeting is Carmen at socan.eco. Our Master Climate Protector is finished for this year. The next session will be February 2021. But just want to call to your attention our sponsors. And if you've seen this before, the challenge is to identify who the new sponsor is that's been added to the Master Climate Protector. We really appreciate the support of these businesses. SOCAN has other projects, and this will be available if you want to look through it, but you also can look at the SOCAN website. These don't have current meetings, but they are happening from working in the classroom to presentations and other things. So these are available for you if you're interested in joining us. And coming in November, and this has just been announced, SOCAN is a sponsor and very happy to help sponsor Enabling Regenerative Agriculture, Getting Paid for Improving Soil Health. Ray Seidler and Rihanna is also working on this, and Lori Kaplan is part of the team. Will be a virtual symposium with the idea of educating farmers, orchardists, vintners, ranchers, landowners, managers, philanthropists, decision makers, state agency personnel, and others on how farmers can get financial rewards for producing healthy soil. And this all helps us with carbon sequestration. And then we just learned about a plastic-free eco challenge. So if you joined the eco challenge in April, this is like that. This is organized by Aaron, who was part of the last SOCAN Master Climate Protector. But if you want to do something about plastics, you might want to go to Aaron's website. That's the Let's Go Green. See what it's about. If you want to register, go to plasticfreeecochallenge.org. And Aaron's group is the Siskiyou Climate Crew, so you can join that team and be part of what we're doing to reduce plastics. Other groups, ROCPAC, Rural Oregon Climate Political Action Committee, is there being a voice for us as we work on things with the legislature to give rural Oregon a voice in the climate arena. And a big thanks to David for his presentation. That was very, very perfect. Thank you so much. Thanks also to Carmen she's in the background doing the technical things. And Ellie and Lori were on Facebook and in the Zoom working on the questions for us. And thanks to all of you for joining us. This is a different format and it's a challenge, so we're glad to do it, and we're glad that you chose to join us. So now the challenge, the need for action grows, and I have added, or I have some of the resources, and like David said, socan.eco/action. And then the two areas, the banking and the divestment investment, are going to have ideas for you. And I'll add the links that he gave us to those pages. Important to realize that you're the ones to step up. Don't wait for somebody else to do it. It's up to you. We made a survey to give us some feedback on this meeting. So if you go socan.eco/meeting survey, that'll take you to a really short survey. We'd appreciate your feedback. Website is socan.eco. Again, my email if you have questions. And as always, we run on donations from people like you. So consider supporting SOCAN if you're able. So again, the survey, socan.eco/meeting survey. And we'd like to thank everybody for joining us tonight. And this will be available live streamed. It's saved on our Facebook page. That's SO Climate. And we plan to take it into YouTube and post it as a YouTube video as well. So if you have any questions that weren't answered, type them in the chat, or we'll save the chat, call attention to them and say, I really want to know the answer to this, and we'll make sure we get back to you. I think that's it, unless anybody has something to say. Thanks again, David. Really appreciate it. And thanks to everyone for joining us tonight. Bye.